Welcome to China Perspectives, a podcast on economic and credit developments in China, featuring experts from within and outside of Fitch Ratings. My name is Ying Wang. I'm a managing director in APAC Corporates at Fitch Ratings based in Shanghai. In today's podcast, I'm joined by Harry Hao, principal economist at CRU Group. CRU offers independent commodity market analysis, prices, and consulting across mining, metals, and fertilizer global markets. Harry is based in CRU's Singapore office and is responsible for the macroeconomic coverage of Asia. He joined CRU in 2021 from academia in the US, where he has over 15 years of experience in economics teaching and research. Harry, thanks for joining us.
Thanks for having me. It's a pleasure to be here.
China has been a dominant buyer in the global commodities market for the past 2 decades. The country was a very stable source of demand for key commodities, and it was relatively insensitive to price. But we all know that the China growth story is easing, and over time, its demand for commodities will change from what it used to be. What's your view on the near-term and longer-term issues which may impact China's demand for commodities?
Thanks, Ying. That's a very great question. China's role as a commodity guzzler has indeed been very, very remarkable. In the past 2 decades before the pandemic, China has consistently consumed around 55% of the global steel, aluminum, copper, and other commodities. However, things have been changing quite swiftly in the past few years. So in the near term, we have been seeing some headwinds in the property sector. And this industry has been major consumers of steel, cement, aluminum, and other commodities. So the ongoing slumps with no immediate signs of recovery is certainly dampening the demand for these commodities. Meanwhile, China has been intentionally investing in infrastructure projects to offset the downturn in the property sector. And that's why the demand for construction materials did not fall as much as the declines in construction activities in the real estate sector. And in the longer term, China will still need commodities for its vast industrial base and ongoing urbanizations. Most recently, the focus has shifted toward to the so-called new productive forces. And for example, the push for the low-carbon technologies could see a rise in demand for example, copper, rare earth, lithium, and other battery materials. So although the era of insatiable demand might be over, we believe China will remain a significant player in the commodity markets. And the key point is the composition and the drivers of that demand have continued to evolve.
Thank you, Harry. There is a lot of talk surrounding China's industrial overcapacity issues recently, citing falling capacity utilization rates and profits in a variety of manufacturing sectors. What's your take on this issue, and what would be the implications for the commodity market?
Yeah, certainly. First of all, let us define what is overcapacity, right? So overcapacity means that the production capacity exceeds the current demand, but the perceptions of demand might differ. Some firms want to serve domestic demand, but also some firms might want to serve the global demand, hence the recent trade disputes, right? So based on this definition, it's true that there are talks of overcapacity in various Chinese industries, such as the steel, solar panel, and automotive sectors. And because in these sectors, we have been seeing a concerning picture of continuously falling capacity utilization rates and declining profits. And the government supports for these sectors in the past few years might have led to the overbuilding of factories and capacities. So now this overcapacity has a direct impact on the commodity markets. First of all, the excess production capacity translates into lower demand for raw material, for example, iron ore and coal, as steel mills operating below capacity simply don't need as much inputs. And secondly, with more supply than demand, commodity prices oftentimes can come under downward pressure. This can actually hurt the producers of this raw material globally. So looking ahead, we actually see that the Chinese policymakers were aware of this issue during last year's Central Economic Work Conference. They have been actually taking steps to address it. For example, they have been encouraging industry consolidation and pushing for equipment upgrades, renewal to improve efficiency. The producers, on the other hand, have been exporting their excess supply to overseas markets. However, this strategy has sparked concerns and exacerbates the trade tensions between China and the US, Europe, and other emerging economies such as India and Brazil recently. But actually, so far, we're actually seeing that the overseas demand for Chinese products during this restocking period in the West has actually so far outweighed this protectionist headwinds.
Thank you, Harry. So, what are the key things about China that you are watching out for in the remainder of 2024 or possibly into the next 12 to 18 months, which could have material implications for commodities?
Yeah, thanks for the question. First of all, in the near term, we're going to monitor the adjustments of the fiscal policy, especially regarding the issuance of the ultra loan special treasury bond, which is starting this week. This issuance of treasury bonds is going to support the infrastructure projects, which will directly impact the demand for steel, cement, and other construction materials. And secondly, we're also going to monitor PBOC's quasi-fiscal tool, such as the resumption of its purchase of treasury bonds in the secondary markets. And in addition to that, we're also going to monitor the utilization of relending programs for several favored sectors, such as green and tech sectors, and the issuance of the Pledged Supplementary Lending Facilities, or the PSL, are also going to be under our radar because that is the funding source for the three major projects. Again, all these monetary policies or quasi-fiscal tools can directly impact the demand for various commodities. In addition to all those policies, we're also going to focus on the housing policy, which is also going to be on our watch list. In the recent Politburo meeting, the policymakers have shifted their focus from building more affordable housing, which is one of the three major projects, to the stocking unsold units, perhaps through the state-backed acquisition. So the central government is reportedly considering creating an entity to purchase those unfinished projects and convert them to affordable homes and rental housing. And this kind of policy shift will likely to keep construction starts down, but at the same time supporting the construction completions going forward, which will actually support for the demand of copper and aluminum. And for the medium term, we are going to watch for the third plenary meeting, which is going to be held in July. While the third plenum will not involve detailed policy making, but it will set the tone for the long-term policy directions in the next few years. So the reform we're going to expect is, for example, further fiscal reform to shore up the local government's finance through more transfer payments from the central governments to the local governments. And we're also going to see more spending coming not from the local governments, but from the central governments. And demographic reform is also something we are monitoring. For example, the relaxation of hukou policy in the top tier cities is also going to be very important for us to evaluate the housing demand. So that is something we're going to look in the medium term.
Great. Well, you touched on a lot of China's domestic economic headwinds, but clearly there are external headwinds as well. The two highly topical issues are increasing geopolitical tensions and ongoing global supply chain diversification. In your opinion, how are these two issues affecting China's demand for commodities?
Yeah, absolutely. Beyond the domestic headwinds we have just touched base on, the geopolitical tensions and the global supply chain diversification are actually reshaping China's demand for commodities in very interesting ways. So first of all, as we have already observed since 2018, the trade war between China and the US, increasing geopolitical tensions, particularly with the US, can actually disrupt the trade flows and creates a lot of uncertainties in the global trade markets. So this actually leads to China stockpiling certain commodities as a buffer against potential supply chain disruptions. And on the other hand, it also can give China a strong incentive to keep upgrading and improving competitiveness to preserve its exports through government subsidies And every new wave of subsidized Chinese investments encourage actually even more of the trade protection, hence creating a downward spiral of the geopolitical tensions between China and other economies. Secondly, the global supply chain diversification is a trend we actually seen in the wake of these tensions. So we actually see that a lot of companies are looking to reduce their reliance on any single source, including China. And this could lead to a slight decrease in China's overall imports of raw materials. However, it's actually very important to note that this diversification process is not going to be very, very quick. It's a slow trend because building this new production capacity and establishing reliable alternative supply chains takes time and investments. And in the short term, China might remain major consumer of certain commodities simply due to its existing excellent infrastructure and established trade relationships. But the long-term impacts, however, could be a more geographically dispersed demand for commodities. So this could benefit some of the resource-rich countries and create new trade patterns. So we actually see quite a lot of investments by the Chinese companies in Indonesia recently. While in this immediate future might see some fluctuations due to various factors, China's long-term demand for resource will likely remain quite significant, despite in a more strategic and diversified way.
Harry, thank you very much for your valuable high-level insight into China's economy and its role in the global commodities market. That's all we'll cover today, but we'd love to have you back again another time.
Yeah, thanks for having me.
You have been listening to Fitch Ratings China Perspectives podcast. To learn more about our ratings and research on China, visit us at fitchratings.com. Please subscribe to iTunes, Spotify, or wherever you get your podcast. Take care until next time.